Us. I get the question all the time, like, how do you make money in stocks? And I tend to go back to Peter Lynch's saga and era at Fidelity. So today I want to talk to you guys about Fidelity, their flexibility to have great managers like Peter Lynch, and share with you a little bit of what I think is the secret for you to be successful. So I'm going to go back and forth what I want to share with you because I've said many times over, I'm long small caps. I think following, I think it's Bank of America research, we're looking at a 10-year period where small caps are going to outperform large caps. That's not difficult to see. But today, because it's lagging so much compared to the Qs and the SPY, a lot of people are doubtful. But remember, you want to buy these when the risk reward ratios are in your favor. It does look like it's been testing 1, 2, 3, 4, 5, 6, 7. And the real question is where it's going to have the breakout. And this is not the first time I talk about it. But if you are looking to make some money in the next 5 years, either on your 401k, your IRA Roth, and if you're outside the US and you don't really have time to manage your money to be actively trading the market, then this is probably one of the best ETF for you to take advantage of passive investment. And I'm not joking, I really think it is. Now, based on my the triangle formation, basic technical analysis 101, then we can see we have a range which is $29, 29 points. This is a 14% area, which once we have the breakout, we're going to look for something close to 263 points to the upside. Then if we expand, that will take us to 267. If you look at potentially how much money you can make with this, and you don't have time and you want to have full exposure to small caps, then you're looking for 20%. And that's conservative. Now imagine if that happens, how much money you think you can make individually. But the real idea behind small caps is that you need to be fast and you need to pay attention. And it's a little bit of a juggle between having a job, a 9 to 5, and then pay attention to your stocks. So a lot of people want to play the passive version of the story. This is one way to look at it. The other situation I want you to look at is exactly how far are we going to take stocks. If we look at the monthly chart and we really think is there anything else that can happen? Oh yeah, absolutely. There's tons of liquidity coming from the Federal Reserve. The story is, what is going to happen to all those dollars? Well, let me tell you something. Do you want to know really what is going to happen to all those dollars? They're going to end up in one place. Yes, the US stock market. Because the vast majority of the ones getting that money are Americans. And yeah, it may be affecting the dollar position as the reserve currency worldwide. But guess what? Americans are not really fond with buying European stocks or buying Chinese stocks or buying Indian stocks. They don't do that. They may buy something if it trades in the US. So that's your wake-up call. All that liquidity is just going to go back to the US. Yeah, some people will do some kind of offshore stuff, and that's great. But the reality is, yeah, it's just going to be US stocks. So I want you to pay attention because what I'm about to show you will blow your mind. And it's just basic common sense. This is the rotation, the full expansion and rotation from money from the great financial crisis all the way up to the top. Yeah, 2018, double top, January 2020. So if you measure that range and you can start saying, oh no, JR, it cannot be that simple. It is that simple. You have 135 points. You have a full expansion of small caps, close to 374%. Now, if you compare this to the Qs, for example, American Tech had a brilliant 10-year period. If we take a look at the Qs, the Invesco QQQ Trust, then and you look at the point, the very low point during October 2008, that was $24. and you measure that to where we are back in the first week of August, that's 378, then you know now why you have something like Amazon. So there's absolutely no question that we have a very nice bull run, 300%. So every $1,000 invested is close to $130,000 thanks to the Q. And this is the golden era of the American technology. This is not to think that it's not going to continue, but can they pull another 1,300%? I don't think so. Can it double from here? Can it be a triple? Oh, yeah. But guess which one is going to be in position to beat the Qs? Absolutely. We're looking then to have small caps in a bull run. I don't think it will be that huge as we have during this 10-year period, but still is the place to be. So let's go back to what we have. Now, let's do this in a two-way idea. First, every time that you use price rotation, you have to understand that you have the figure, that's the point version of it, 135 points, that's $135. Now, the expansion of the asset was 374% in a span of 10 years. This is very important because it will take us to basically the idea that Peter Lynch is going to share with you in one of his questions in this interview. And one of the things he says, it's about being an investor is not a lottery ticker. How do you feel when the market drops? Lynch, over the 13 years I ran Magellan, the market went down 9 times, 10% or more. Every time it went down, the fund went down more. So I just didn't worry about it. The stock market's being the best place to be over the last 10 years, 30 years, 100 years. But if you need the money in 1 or 2 years, you shouldn't be buying stocks. You should think about being in a money market fund. And he's right. So the answer will be not to be in a money market fund. The answer will be to position yourself in something that has it's a little bit more aggressive. And in that case, that will be the IWM iShares Russell 2000. Because like I said, the Qs and the SPY, they already did very well the last 10 years. So let's look for the surprise. I like to call it the wow factor. Let's wow you because no one think, for now, that small caps are going to do well. There's some evidence, there's some research, but no one is paying attention. So what we're going to do is just understand the level that they needed to break. This is the level that I needed to break. It's the high back in August 2018 and the high from the fall in January, February 2020. And it did it. But there's still a lot more to see. How I know? Well, basically because money rotated for about 2009 all the way to this point. All right, so that's 137 points. And the first thing you do is you just come with a basic idea. Remember, we're walking what we call the price discovery. So 137, that can be 140. That will give you a target of 314 points. And that's only 82%. Remember, 137 points in a span of 10 years was about 390% expansion. So then what we're going to do is that we're going to expand. Remember, the U.S. is flooded with liquidity. The banks have money. Consumers have credit cards, cash, savings. It's amazing. And you can't deny and be like, wow, no, America's not doing well. Yeah, Uncle Sam may be broke. But don't buy the story that all Americans are broke. That's not the case. And the best way to protect their money, yeah, they're going to look for digital assets, cryptocurrencies. They're going to look at gold, silver, absolutely. But they're also going to have stocks because that's where you have also something very important, tax benefits. Don't forget that. Let's now expand this. From that level, if you look for 390, and I'm going to be very clear about this. You cannot see it today, but if we expand this story, okay, look at all that. Let's take a look, and we only have 200%. We still can do more, all right? Now, this is not going to happen in 1-2 years. It can take easily 5 years. And that's why Bank of America, they have been saying, there's a chance that absolutely small caps can beat large caps. That's not difficult to see. And I'm not the only one saying this anymore. It's also Bank of America. So now you have with only from the 390 expansion, you have 200% expansion. You have a value of 520. $520 for the Russell. That's how high it can go. That's just based on simple math, simple expansion. Pretty basic information what I'm doing today. So if you buy today, let me just calculate this right there. Okay. All right, there you go. To this target, now you're doubling your money on small caps. That's huge. That's huge. Not only that, what is the risk you have involved? Initially, you have a risk that can be, 30%. Let's call it with a 35, 37% risk. So that means you have a risk reward ratio of 1 to 3.8. That means for every dollar you risk, you're probably taking home $3.80. Listen, I'm going over this analysis today. Today is Wednesday, September 22, 2021. And you may think for a second that I'm joking about it, but this is exactly how things are going to play. Every time the U.S. stock market is on on all-time highs, there's someone that is going to come to say, like Morgan Stanley, and I talked about it, that there might be a 20% retracement. It doesn't matter. It can be 20%. And that takes me to another Peter Lynch moment. What is Peter Lynch saying? You have got to look in the mirror every day and say, what am I going to do if the market goes down 10%? What do I do if it goes down 20%? And am I going to sell? Am I going to get out? If that's your answer, you should consider reducing your stock holdings today. That's simple. That's why when we talk about investing, we always say, invest with money that you can afford to lose. But in reality, if you go back to the whole idea, over 13 years that Peter Lynch was a manager, look at the man. I think he said he's 75 years old now. But look at the man. He's telling you that you need to play the game with time. And there's a difference between being an investor and being a trader. Traders, we have opportunities in the short term. That could be exhausting, right? But if you look at Peter Lynch, and what he's saying is just play smart. So here comes the kicker of this analysis and this idea for you to position yourself today. Hey, if it goes down, yeah, I know where it has to go. I already know where the IWM will trade back. It can easily go back. Let me just take this one out. Price range. If we're here, it can trade back. Yeah, 21%. It can easily go back to 173. And if I look further, I know there's some liquidity back on September of 2020. So guess what? I know it can trade back at a minus 35%. Crash? I don't think so. Discount. Now, I'm not going to say, let's face it, okay? It's not going to be a nice ride to this level. No one's going to be happy. But in the long term, remember, everyone was crying here. Never forget that. Everyone was crying with this 42%. It probably was a 43. I understand. But if you know the game, if you understand the game in the long run, in a period between December 2002 to this point, almost 18 years, you do know that you are going to win. So if you're looking for a quick profit, I understand you may need some money to pay bills, or you're eager to make money in a week or 2 weeks. Then you have to develop the skills to learn how to trade options. That's what we do at the Profit Flow Group. And you may want to watch at the end of this presentation. There will be a link for you to watch the broadcast and understand what I do. But I'm convinced, and for the first time in many years in my life, I know I'm going to beat the market and win the game. And this is one of my greatest ideas, small caps. Not because I think I can do it, it's because I know someone else did it. Now, you may want to also go to Fidelity and look for lessons from an investing legend, and go over this interview. Go over the things you can learn from one of the best. Because most of the money that he made, we can always argue, but he did it with, small caps. He make that. He buys some stocks, he hold them for years, and he squeezed the market for a lot of money. That's what you have to understand. And the other thing, and there are a lot of things that I like about this, you have to do research. And there's a lot of stuff especially this section. What do you look for when shopping for stocks to buy? Lynch. In baseball terms, you want to buy in the second or the third inning and get out in the seventh or the eighth. Walmart was in only 15% of the United States when they were a 10-year-old public company. All they did for the next 30 years was go from 15 to 100%. The stock went up 50-fold. They had a great formula, and they just rolled with it in the United States. You see my point? All that liquidity will stay in the U.S. American investors, they buy U.S. stocks. Look at all that Walmart did and how Lynch is explaining it. They just grew in the U.S. So the reality is that all that excess liquidity, American investors are going to buy their market. Forget about China. China is a nice story, and there are a few companies like NIO that will do okay. But right here, the legend, Peter Lynch, he's telling you, just stay in the U.S., man. There's a lot of people there. So remember, you want to buy in the second or the third inning and get out in the seventh or the eighth. What that means is, yeah, I'm telling you, we're heading this direction. I completely am confident. This is a high conviction position for me and my team. And we're going to 521. Is there more? Yeah, I absolutely think there is more. And it's because the expansion can accelerate over a 10-year period and can take us, like it or not, it will take us to about this level, the 800 level. It sounds like a dream. You may think, you may doubt it. But let me ask you this. When we were over here, when we were right there, okay? Minus 43%, minus 44%. Did you ever thought we will do something like this? Let me just fix it here. Huh? Let me remove everything. Let me clean the screen. When we were in this area, have you ever thought that after this, we could make this 140% in less than 2 years? Did you? You did not. You did not. And although now we are in positive territory, remember Lynch, you want to buy in the second and third inning, and we are in the second, by the way. The recovery was 2020, and the shortest recession in mankind was by the end of the summer 2020. So that means that recovery was 2020. Now we're on year one of the bull market. Think about that as the second inning. All right. So if that's the case, now, according to Peter Lynch, you want to buy this. And then you have to prepare yourself for what is next. Today, I'm not going to pitch you an idea that we have a sales pitch or we have a stock or tease you. I'm just giving it to you. More than learning or the fact that we want you to join our service is the fact that there are opportunities right now. Every time the stock market is into one of these pullbacks or needed a retracement, someone is calling for a crash. But every time we have this price action, 30%, 27%, 17%, okay? 28%, 44% to the downside. Guess what happens? Well, hey, look, 152, 95, 28, 79, 33, and 139. So the training today and the purpose of the video is to show you whatever happens here will open doors for the next price action, the next movement. And every time that you have a movement, you're building the space for a new expansion. So right there, even if we have a retracement here, guarantee you will have another push higher at least 134 points, like I shared with you, and that will translate into massive profits for you. I want you to learn from Peter Lynch. I want you to know that this guy is still alive, Burnley, and you should definitely read this. I want you also to pay attention to your chances, where you can make the money. And don't forget, these 10 years are going to be for the small caps. And the best way for you to position yourself and capture that profit, that upside, without too much headache, too much effort, is to look for a passive approach to your investments. All right. As usual, look, there's a link in the description of this email, also in the video, where you can watch the broadcast. It's totally free, and you can learn more about what I do and how I'm going to play the next 10 years buying call options in the Russell. All right? I thank you for watching. If you have any questions as well, please feel free to reach out to us so I can explain more. But definitely, it doesn't matter if we have another 20% correction. I will be a buyer, and I'm not going to sell until I get my final target, 520 for the Russell 2000 ETF, IWM.